Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, August 18th, 2023. And our top story today, CD rates are on the rise. How to pick the right one for you. Joining me now to discuss this and a lot more, Ted Rossman is with Bankrate. Ted, always great to see you. Thanks so much for joining us on the program this morning.
It's great to be here. Thank you.
So we're going to leave the credit card topic and put that one aside. This one has a direct correlation to rates, interest rates, that is. We're going to talk about certificates of deposit. Let's start with, what are CDs?
CDs are basically a time deposit at the bank. So you're putting cash in, you're agreeing to lock it up for a certain amount of time. You typically can touch it if you really need to pull the money out, but there's an early withdrawal penalty. So maybe you're sacrificing 3 months or 6 months of the interest that would have accumulated. But basically the intent is to leave the money in for a period of time. A lot of times we're talking about anywhere from about 6 months to 5 years. And it's actually an especially popular strategy among retirees who may be looking for some extra yield on their cash. They don't want to take on risk. They have that longer time horizon. That's often one of the use cases, but there are others too. I mean, maybe the down payment fund for a house or your kid's college that's a couple of years away or something like that.
Yeah, and I want to say hi to my mom, because my mom and I talk about CDs all the time. She is infamous for rolling over her CDs. Mom, love you. All right, Ted, with that in mind, sorry, I had to take that little aside. Ted, with that in mind, how are CDs? So they're a different financial instrument. They're made up of certain types of underlying instruments. How are they different than a savings account when it comes to interest rates? Because a lot of people are definitely familiar with checking savings accounts, but maybe they're less familiar with CDs.
We're in a little bit of an unusual environment right now because normally the longer you lock up your money, the better the rate you're going to get. Right now, out of these three products, a 1-year CD, a 5-year CD, and a totally liquid savings account, right now the order of operations is 1-year CDs are yielding the most, at least in terms of the top yielding accounts. The top 1-year CD is about 5.5%. And then in second place would be savings accounts, especially online savings accounts. Smaller institutions sometimes offer a little over 5% on those. And then the 5-year CD right now tops out at about 4.5%. I think this is reflective of a few things, namely the fact that the Fed has obviously pushed rates up a lot over the past year and a half, and that has short-term rates higher. The longer-term expectation is that at some point, certainly in the next 5 years, rates are going to fall. Maybe that starts to happen sometime next year. The longer term growth trend of the economy is relevant here. So what I actually think might make the most sense for people, it depends on your risk tolerance and your time horizon, of course. But if you're a retiree, you might want to hedge your bets, open what's called a CD ladder, and you basically buy these varying maturities. So maybe you go from 1 year to 2, 3, 4, 5. You do a 5-year CD ladder. Every year, one of these is going to be maturing. So then you just buy a new 5-year CD every time that happens. And then you have something maturing every year and you hedge yourself against some interest rate risk.
And Ted, to your point on the laddering, can I go into a bank? A lot of people still want to go into a bank. I like looking at the teller. I looking at the bank agent, whether it's on Zoom or whether it's in person. Can I go into any bank in the United States or in another country, if someone's watching this outside the United States, and buy a CD or ladder my CDs?
Yes, these are very common. So banks, credit unions, even some brokerages offer these. So yes, widely available. I think, getting back to that idea about the risk tolerance and the time horizon, right now, savings rates are really attractive as well. So there's also that angle of, if you don't want to lock up your money, at least right now, you can get more than 5% on a really liquid, federally insured account. The question, though, is what happens to rates in a year or 2 or 5? That's where, if you have this longer term need for safe money, that's, I think, especially when a CD comes into place. Or like I said, if you know you have a big expense in a year or two, like you're going to be buying a house in 12 to 18 months, or your kid's going to college soon, so you don't want to take a lot of stock market risk, that may be a use case for CDs as well.
Well, Ted, I want to take a very quick break. I have to, because we got to pay the bills. When we come back, we'll talk more about finding CDs. Are they secure or not? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. We're joined this morning by Ted Rossman of Bankrate. Ted, thanks as always for sticking with us for segment number 2 this morning.
Of course, yes, thank you.
Now let's continue the conversation and what, like it used to be, I can still see my grandfather opening up the Baltimore Sun and looking at CD rates. But you know what, Ted? A lot of people don't even get the paper delivered to them anymore. They get it on one of these. So how do I find current CD rates and how to enroll or how to buy a CD?
We have a great listing at bankrate.com. It's funny you mentioned the print publication. We started in 1976 as a print newsletter, and people could leaf through and look at the most attractive rates. Now we're a website that you can quickly and easily open these. I would urge people to keep their mind open when it comes to the institution, because as long as it's insured by the FDIC in the case of banks or NCUA in the case of credit unions, you're totally insured up to that limit, $250,000 per depositor per category. My point being, you probably haven't heard of a lot of the top yielding accounts. So when you go to a website like ours and you look at the top yielders, maybe it's Connexus Credit Union or Merrick Bank or Popular Bank, or, chances are it's probably not one of the big 4 brick and mortar banks, but that's okay as long as you're insured. So that's the value of shopping around, casting a net wider than the big bank down the street.
And would you see on the site, or when you go to the bank's website, the entity's website, there's a little icon, right? Or logo that says FDIC insured? Or
that's so important. Yeah, especially this year, we had that wave of bank failures. All of the institutions on our site are FDIC or NCUA insured. That's just a policy that we have. But, it is good to do your own homework, verify this. It's so important because you may have larger sums too. Maybe you're a retiree, your nest egg is larger than $250,000. A few thoughts there. One would be, if you're married, you and your spouse each get that protection. So a joint account could actually be up to $500,000. But also some other considerations. You could open accounts at different institutions, or we mentioned before those brokered CDs offered by the likes of Vanguard and Fidelity and others. They partner with banks and actually make it easy to park larger sums with the brokerage, and then they carve it up and they divvy it up into different bank CD accounts. So that can be another workaround.
Yeah, really smart. Ted, I just want to circle back to to the 1 year, you said it was somewhere around 5%, doesn't have to be specific, but is that a guaranteed amount? Meaning, assuming the institution's FDIC or insured up to 250,000, do you get that 5% or whatever the number is at the end? So are you guaranteed to get that at the end of the term?
CDs are almost always a guaranteed return. The one sort of asterisk here is sometimes there are what's called callable CDs where the bank could basically opt out at some point. That's actually more common on those brokered CDs. That's actually one downside there. But the vast majority of CDs are guaranteed. So we're talking about a risk-free, guaranteed return as long as you keep the money in the account for that amount of time.
I mean, the benefit to the bank, you're just trying to play it through from the bank's perspective. Obviously, we know what the individual gets. They get a 5% plus return, whatever the interest rate is that they agree to. But the bank, they don't just keep it in a vault. They lend it out. We have a fractional reserve system. So they'll lend out the money to others, and they can presumably lend it out at a higher rate of interest because, as you said, interest rates are going up.
That's exactly right. Yeah, that net interest margin is how banks make a lot of their money. I think this also brings up the point, though, of shopping beyond the giant monster mega bank because they have all the deposits they need. You know, institutions like Citi and Chase and Wells Fargo and Bank of America, they're not really aggressively chasing deposits right now. They're not offering the best rates because they don't have to. They have a ton of deposits. It's those smaller institutions, whether it's a community bank or credit union or online bank, these are the ones that tend to compete more aggressively on rates. The other thing is this is how they advertise. They usually don't have these national branding campaigns. So that's just another point in favor of shop around. As long as it's federally insured, it doesn't matter if the bank is a household name or not.
Absolutely. And that's why you need to do your research, whether it's Bankrate, whether it's looking at your old paper, if you still get the paper delivered, or somewhere else. It's an important financial instrument. People, especially, I love that you brought up the retiree, because there's so many retirees now that would have a source of retirement income. Ted, we're going to have to leave it there. Always great to see you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Sounds great. Thank you.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Then visit our website. We're back again tomorrow for another edition of BRN Weekly. We'll be joined by the infamous Jane King, and then we'll be taking a look back at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.